Fed's decision to exit from balance sheet policies has indirect impact to gold price. Gold prices are moving downward slope. The Federal Reserve left the target range for its federal funds rate unchanged at 1% to 1.25% during its November 2017 meeting as widely expected. Policymakers said the labor market has continued to strengthen and economic activity has been rising at a solid rate despite hurricane-related disruptions, suggesting the December rate hike is still on the table. Interest rate in the United States averaged 5.76% from 1971 until 2017, reaching an all-time high of 20% in March of 1980 and a record low of 0.25% in December of 2008. FED will most likely raise the interest rate by 0.25% from 1.25% to 1.50% at the next meeting on December 13. According to Fed Rate Monitor tool, the probability of an increase in the interest rate on December 13 increased from 98.2% to 100% on Friday. The evaluation of stock exchange analysts, investment bankers, and investment fund analysts is an increase in the rate from 1.25% to 1.50%. Let's look at the gold chart. Short-term outlook: gold price is below EMA 20. Gold price will decline. Mid-term outlook: EMA 20 is below EMA 50. Gold price will decline. Long-term outlook: EMA 50 is above EMA 200. Gold price should rise. The tendency of falling gold prices in the period from the end of September of the current year to the end of January next year has been present for several years since the Fed started with monetary normalization and raising interest rates. A slight correction of the price of gold is possible at beginning of next week. Stochastic oscillator points to this. Dust is an extremely aggressive inverse play on perhaps the most widely followed gold mining index, the NYSE Arca Gold Miners Index, and the widely held ETF that tracks it, GDX. The index tracks about 30 firms engaged in the precious metals mining industry globally, with a strong bias to large gold and silver mining firms. Dust promises to provide inverse exposure to these firms with a leverage factor of 3 on a daily basis. The last point is important, because investors trying to make a long-term bet against gold mining shares can only use Dust to do so if they are willing to frequently adjust their position in the fund. The good news is the market for Dust is extremely active, as evidenced by the fact that it trades in large volumes each day, although spreads can be significant. Its expense ratio is high, 1.12% to be sure, but most traders won't hold the fund for long enough for those costs to be a major factor. Let's now look at chart of Dust. Short-term outlook: the price is above SMA 20. The price will rise. Mid-term outlook: SMA 20 is above SMA 50. The price will rise. Long-term outlook: SMA 50 is below SMA 200. The price should fall. MACD is above signal line. Stock 14.3% K crossed above %D, but overbought 82.92 above 82.89. As with the gold chart, but in the opposite direction, this could indicate a slight correction early next week. ATR 14 equal 1.252 high volatility ETF. SAR 0.02, 0.2 is below price. Ichimoku 9.26.52 price is above the cloud. Average volume 7.6 million shares. Volume on Friday, November 3, 5.9 million shares. Money flow index MFI 14 equals 72.48. Support S126.53. Support S225.54. Support S3 24.67. Resistance R1 28.39. Resistance R2 29.26. Resistance R3 30.25. Chandelier exits 22, 3.0 equal 24.47. Our recommended stop loss 24.47-11, 06%. In the previous year, from November 6th to the December 11th FED hiked the rate on December 14th, dust price has grown over 90%.